Right. Good evening, or should I say good afternoon, guys and ladies.
Ja,
Welcome to our strategy session for this evening. Now, we're quickly
dat maakt me
running and going. I want to kind of tackle this a slightly bit different
very
than what
thanks.
we've normally been doing. Um, and what I want to do is I just want to kind of make sure and check with you guys as well that you understand the process of putting together a strategy, okay, quite well. That's the big part of the session. Okay. Now, with the previous sessions that we've had with the strategy building session, we've kind of just jumped in and started putting something together. So I thought today, what we're going to look at doing is let's just go back to the basics and look exactly what is needed, how we go about it, and the whole thinking pattern behind putting together a strategy in essence. Okay. Now, right. Just to let you guys know as well, okay, if there's any questions that pop up, okay, while we're going through any of the things over here, by all means, okay, just use the chat feature at the top left, okay, open up the chat window, and then you can just basically, shout out a question or anything like that, just to make sure that, you don't fall behind or you don't, miss something in essence, okay. That's the important part. Okay, so be sure to just use that chat feature for anything, okay? And make sure that if there's any questions that you just use that and we go from there. Okay, now, first things first, okay? What does any good strategy consist of? Okay, so I've got it laid out here for you guys, okay? Biggest thing that's going to be needed, and there's three things that we look at, and each one contains a different, I want to say, portion of the strategy. Number one, okay, the one that we're looking at over here, that's basically entry conditions. Okay, that's the first thing we're going to look at. Okay, now entry conditions, what are those? Okay, entry conditions basically, like I've said over here, this will cover any condition that needs to be met in order to open a trade. So in pure simple terms, entry conditions would be any rules that you've laid out for your system to enter a new trade. So it will be looking at identifying bullish or bearish, what you're going to use for that. So what rule do you have to class a chart as being bullish or bearish? Okay, and what would you use to time your entry with? Okay, so everything that's needed in order to open a trade. So any indicators you're going to use is going to be mentioned in here. Okay, any filtering you're going to do is going to be mentioned here as well. Anything that needs to happen for you to be able to execute any entry, all of that will be listed under entry conditions. That's our first point. The next point we've got, okay, is what we call our exit point. And that is basically exit conditions. So that's the second part or section of any good strategy. Okay, remember, we need something to tell us how or when to get in. We need something else to tell us when to get out as well, because it's useless if you get an entry, right, and you get in, but now what do you do to get out? Okay, where do you place the stop? Where do you set a target? Okay, how do you know that the market is not viable anymore? So all those different types of things, you need a set of rules to be basically or give you guidance as to when to get out of this trade. Now, normally with exit conditions, we start with, basically just two. but we're going to run through that in a minute. Okay. The third one we're going to be looking at is what we call our trade management system. So those are the three basic components that any strategy consists of. Okay, so just remember that we've got three components: what to get in, what to get out, and what needs to be done while the trade is open. So have a look here. Trade management system would include anything that is required to be done while the trade is still open. And this would include things as well as stop loss management details and risk to reward perimeters as well. It basically gives the rest of the bulk to the system. Okay, the extra wording we're looking for in those type of things. Okay, so it's anything that needs to be managed. If you're going to ratchet a stop, it needs to be put in there. Okay, if you're going to partially close the trade, in other words, close it in increments at certain points, you're going to need to make mention of that in the trade management section. And you need to be very descriptive of how you're going to do it. If there's any I would say open-endedness to any of those conditions that you're going to give, you're going to have troubles. And here's the thing. Once you start backtesting a system, you find it very difficult to backtest it, that's your first warning that your strategy is written incorrect. Okay, so normally you guys would find it, and unfortunately you've done the work in putting together the indicator. But that's why I always say only do a 1 week backtest in the beginning, just to see if you can do it and if the system can be applied properly. Okay, before you go on to a full one. Normally any issues that your strategy might have in terms of your conditions and so forth will be shown within that first little backtest. Okay, so if there's any hiccups. If there's any confusion that comes in, okay, during that point, you know you need to cover some of your conditions a little bit better. Okay, right. Now, it all comes down, okay, to narrowing your variables used. Okay? Because having too many will cause confusion and doubt. Now, what's the variables I'm talking about? Well, variables, basically, these would be conditions for entry or even exit. Okay, a variable is anything that would have a possibility to change, that kind of thing. So you're looking for something that's concise, that's clear. Okay, and remember, the trade could either go up or go down. If you're going to have too many different conditions, okay, you're going to find that your strategy becomes very difficult to, firstly, generate entry signals, and secondly, to generate actually profits. Okay. Now, this is why we always start a very basic, and then we assess what the issues would be, and from there we start building it further and doing tweaks. The key fact is being able to put something together in the beginning that you can start running with. Okay, and that's what we're looking at here. So remember, there's three sections. Okay, we've got entry conditions, exit conditions, and a trade management system. Okay, remember, these three things need to be known before you even enter a trade. Okay, and the fact is, I'm talking about, you know, live trading. Demo trading, you can go mad. Okay, it's play money. It's basically monopoly money. You can have whatever amount you want in your account, and with that, you'd be able to kind of play around and test a couple of things. Okay, it's a very good way of getting a feel for how the markets run and what happens specifically in terms of using certain indicators, and it's normally a good way to maybe come up with some new entry conditions and so forth. Perfect place to test them, okay, and that's on the demo accounts. But when you're going to go live, remember, those three things, those 3 points of any strategy needs to be known before you even enter a trade. Otherwise, you're only going to get yourself into a world of trouble. Okay, how's it, William? Good to see you on. Okay, and Divya, good to see you on here as well. Okay, awesome. Right, gents, so now that we've kind of covered this first little bit, let's have a look at Next slide. Okay, like I said, we just get back to basics quickly. We've been slapping a couple of strategies together. I'm going to run through this quickly. Remember, we've got about an hour in the session, so we're going to run through this, and then we'll just look at, putting something together. Maybe look at a couple of different techniques and those type of things of finding, viable, how to say, indicators within your systems. Okay, this is why it's very good to, and not very good, but very helpful to know your indicators really well, because it's just going to give you more options when looking at building different strategies. Okay, right. The big trick in building a strategy is having something that is easy to firstly execute, it's easy to follow, and it's easy to manage. The problem most people have got is they try and make their systems, how to say, too, the right word won't be professional. They try and make it too bulky. Okay, they've got too many conditions in there, and it's purely for the fact that they're trying to use everything that has been taught. Okay, but the problem is that it creates more issues than anything else, because you can't make the tweaks or add them before you've actually tested the system without them. Okay, how do you know those tweaks that you add are going to make it better or worse? Okay, before you've added them. That's the thing. You don't. Okay, you need to start with the simple basics first. Okay, the other stuff that you're learning and so forth, the little tweaks or the little techniques I've taught you guys and so forth, that only comes in after you've done your first back test. So with strategy building, it's like a two-time type of process. Okay, your first time that you do the strategy building, you basically just put something very, very basic together. And you always start that way with any strategy. You do a quick test, and from there we analyze where the issues are, and then we bring in those tweaks, those little extra techniques to eliminate the problematic areas. And so the strategy gets basically developed into a much stronger and more profitable system. That's the process. Okay. If you try and do everything at once, problem is you're going to have a very difficult time finding out where the problems are. Okay, and you literally have to start from scratch, so you actually double your work that way. It's just about the flow, the process that needs to be followed in terms of strategy building that's going to make your job a lot easier. So remember, the big trick is starting, okay, with a strategy that has got very easy, how to say, flow to it. It's easy to execute, easy to manage. We want to start off very basic and simple, and from there we start building and adding on. Okay, right. Problem most of us face is to make sure that we stick to our strategy. Okay, and I found that happening with quite a lot. It happens with bulk of the people, and this is why I go through this method of strategy building. Okay, this saves you from a lot of the confusion. Okay, from kind of veering off the pathway. Because the biggest issue we get with discipline is what? It's emotions. Okay, the emotions come into play, and we start thinking hundreds of other scenarios that could come up, and we try and adjust our position for those scenarios. But we've never tested them, so they don't work. You see, and you only get yourself into more of a frenzy, more of a panic. And with that, then you notice that you tend to lose a lot more than what you're supposed to. Okay? And that's purely by being influenced by the emotions. So how do we make sure that we don't let the emotions influence our decision making? And here's where it comes down to. Okay, this is why I've got a fantastic way of making sure that we stick to, firstly, our rules. We eliminate the doubt. You trade consistently, and you keep a track of each trade perfectly. Okay, and most of you know at this point already. Okay, that's what we call our tick chart method. Okay, remember this guide for strat building is a must from now on. Okay, everybody needs to build their strategies in the tick chart format. Okay, now let's have a look at how that flows. Now, first thing we're looking at here is we're looking at entry conditions. Now, entry conditions, they technically get split into two sections. We've got conditions for a buy, and we've got conditions for a sell. They're going to be the exact same conditions, just vice versa. So when we're looking for bullish, it's under buy. When we're looking for bearish, it's under sell, because it's useless to buy in a bearish trend, isn't it? Okay. Right. So with any entry that we're going to look at in taking a trade, there's normally two things we need. And what is that? Let's hear it. What are they? Do you ever? Can you remember? Okay. Whenever trying to enter any trade, okay, our entry conditions, there's two things that we need. Two things that we need to identify or look for in order to be able to take the trade. Minimum of two things. What are they normally? First thing we always tend to identify is
Dirk, can you hear me? Dirk, can you hear me?
okay. So William's saying signal, right? Okay, what signal? I'm looking for another word actually. Okay. The right word would I'm looking for. Okay, and the first thing we're always looking for is direction, or other words, trend. Okay, because there's no use in getting a signal, but you're going against the trend. You understand? Okay, so we have to identify the trend first. And that's why you see that our first condition tends to always be our direction indicator. Okay, in other words, we're going to use something to identify the trend with. Okay, so any how would I say, any, what's the right wording now again? Any indicator that focuses more on trend flow, okay, would be the ones we're going to be looking at. Okay, and with that, it helps us to classify whether the chart is going to continue in the upwards momentum or whether it's going to run in a downwards momentum. Okay, so we want to classify whether something is bullish or bearish. Normally, our lagging indicators work quite well to identify trends with. Okay, so remember, when we're looking for direction, our lagging indicators tend to work quite well for that. You guys might have picked up that sometimes we find that they don't kind of sync that well with the other indicator we use for entry signal, okay, like you've mentioned, William. That's the second one we're looking for. Okay, we're looking for an entry condition into the original direction once we've identified it. So those are the main two things we tend to look at. Okay, it's direction and entry into the direction. Okay, so normally we always only start, and that's the thing, you guys are always going to start with only two conditions. Something to classify direction with and something to signal the entry with. Okay, so we always start off with the basics first. Now you see that I have made a mention of a third condition. Now this is where we add maybe tweaking into it. So I might find that I would only take those signals if, let's say, I'm using the 3 moving average system, okay, to class bullish or bearish or so forth, okay, I might stick out of the consolidation periods. Or I could say that I'm going to use the ADX, and when it's below a particular level, then obviously the chart's consolidating. So my rules basically, aren't valid anymore. So I've got the first 2 conditions, and if the ADX is above, let's say, the 20 level, then I can go, because then there's momentum, then there's flow. Okay, so you'll notice that the third condition tends to only come into play after your backtesting, okay, because it's a tweak that we bring in. Okay, so remember, we always start with 2 only. Okay, so like you see here, most of the times only 2 conditions would be used, but as you progress with the building of your strat, you might add another condition or 2. Okay, so that's what we go on with putting together entry conditions. That's the first part. Okay, so when you're writing it down, that will make up the first position of your strategy. The second part that we're looking at is our exit conditions. Now you can see here's quite a couple. There's only 2 that you're going to start with here as well. Okay, I do not want you guys to try and add these extra conditions here. Okay, these are just added conditions to show you how many conditions you can really have for exit. Okay, I mean there can be many. Okay, different variables to kind of tell you when is the right time to get out. But again, those only come in after the tweaking. So you always only start with the first 2, and that's quite simple. It's either the stop loss which is hit or the target which is hit. It's that simple. Okay, so that's the exit conditions that we're going to start with. You can add extras later on. Okay, once you've done your original back test and you found the weak points and you see that, okay, maybe if I close some of my trades as soon as the trend changes, I might be getting out with more profits, okay? Or I might stop certain trades from turning into losers because I'm closing them how to say, at a more appropriate level, okay? And if it works and it gives you more profits, then it's definitely an extra exit condition that you'd want to enter. Now the thing to remember is the exit condition is just that. It's going to get you to close the entire trade, the full trade. Okay, it's not a portion of it. Closing a portion of the trade is basically, full trade. So remember, we've got entry conditions and exit conditions that we've looked at now. Entry conditions, you're going to start with the basic format of 2 indicators. One for direction, one for entry. Okay. Exit, it's going to be target and stop. 2 again, nothing more. Okay. And we only add the rest once we've done the first back test. Right. And then, thirdly, we're going to have the trade management system. Now with the trade management system, this is where all the extra bulk comes in. Remember, like I said, here you're going to want to make a mention of type of risk to reward ratio you're going to use. We always start off with what? What do we always start off with the risk to reward ratio when building a strat? And the reason we always start off with it is only to have a measurable result, so that we can gauge any of the changes we make against that, whether it betters the results or worsens it. Who knows? What's our starting risk reward that we always use? It's 2 to 1. We risk 1 to gain 2. Okay. Right. You're also going to make a notice or a mention here of how your stop loss will be placed. Okay? Because it's great having a stop loss as an exit mechanism, but if you don't know where to put it, it's not going to help you much, is it? Okay. So our stop loss placement is very, very important as well. And this is where it gets mentioned. It's within the trade management section, that last section of any strategy. Okay. Now, what's the wording of stop loss placement we use, or we always start with? Who knows? Who's going to give that one? Okay, still waiting. Okay, looks like it was a long day at work for most of you. Okay, here it is, guys. Okay, stop loss is placed at the most recent high or low within 7 candles. Okay, I like using the 7 candle ratio. And remember, the 7 becomes a variable. In other words, we can later make it 4 candles or 5 or 3 or even 1. Okay, that comes in the tweaking phase. But when we start building our strategy, we always use the most recent high or low within 7 candles. Okay? And the reason for that is that makes sure that we've got more than enough space, okay, between our entry and our stop for price to kind of give it the chance to correct if needed, okay, or make that little retracement that it tends to do, okay, and it still keeps you within the trade. You'll be able to spot with this, and this is the beauty of it, okay. A lot of the times you might be hit with a scenario where it's very difficult to identify which is going to be the exact stop loss level, okay, if you don't use that wording. And a lot of you get confused, and sometimes you place your stops at the incorrect spots, or you maybe have it a little bit close. Okay, that just helps you from getting into that portion of confusion. Okay, you'll notice basically that if you haven't got the wording set out properly, let's say you just use stop loss is placed at most recent high or low. What class is a recent high or low for you? Okay. Sometimes you're going to have it at one point, but you get given the same scenario another day or another week, but then you place it differently. Okay. You need to find the right wording to stop you from doing that, because once you start doing it like that, you're actually trading an inconsistent strategy, and there's no way to be able to backtest something like that. Okay, so remember, the reason why we word our strategies the way we do is purely for one reason. It's to make sure that we can use it in a backtest session. Okay, if your strategy is not written correctly and you've got quite a couple of conditions or things missing, you're going to notice that backtesting is going to be the most difficult thing on earth to do. Okay, following this process makes it so much smoother for you because you know exactly what you need to do at any point in time. Now, other things you're going to add in here is you're going to most likely add something like your indicator settings that you're going to use as well. So let's say maybe you use a stochastic. You're not going to use maybe the standard of 1433. So you're going to maybe use 835. Yeah? You need to make a note of that, so that everything is set there and that kind of thing. Just make sure that I know exactly what you're doing as well and how you're going about it. And a lot of people tend to just tweak some of the settings on the indicators as well to kind of flow a little bit better with the chart as well. And there's another little nifty trick that you can try and do. We'll get into that very shortly, and I'll show you guys how we go about it. Okay, that's literally just playing around with it. Okay. And that is basically the three components needed in order to put a strategy together. So we've gone through with a little bit more detail on each now, and hopefully most of you now can take this and start putting something together. Remember, all you're going to do is you're going to use a risk reward. You always start off with entry conditions, something for direction, something for entry into that direction with your conditions. 2 conditions only. Exit conditions would always be stop with target. That's it. Okay, and then your trade management system will have a risk to reward of 2 to 1. That's what we start with always. And our stop loss wording is the stop loss is placed at the most recent high or low within a 7 candle period. Okay, and that's it. That's what we always start off with. From there, we analyze and see where weak points are, and we work on them with the other little techniques I've taught you guys to remove them and better the results. Sometimes some of us hit extreme luck and we get it right the first time. Hey, if you get it like that, well done. Saves you a lot of effort, definitely, but it's very unlikely that most of you are going to get it right the very first time. With putting a strat together and seeing that this produces a heck of a lot of profits. Okay, right. This framework should be followed every single time you're going to build a strategy now. Okay, and this is going to force you to stick with your strategy every single time. And you've noticed that I've put little tick boxes, especially in the entry conditions and exit conditions. Okay, those tick boxes need to be there because you physically need to tick off each condition as it happens, and you can only enter the trade once all of the conditions has been ticked. This makes sure that you follow the discipline within your systems and you don't get influenced by the emotions. You're going to have the emotions. There's no way of removing the emotions. They are always going to be there. Okay, guys, even I still get the emotions. Okay, the difference is I know how to handle it. Okay, so I know how to remove my decision making from the emotions that I'm having. I mean, I get very excited sometimes. I get very distraught sometimes as well while I'm trading. These things happen. It's just the way the market plays with us. It's because we've got such more of a tie to the account, specifically when it's your live account. Okay, it's easy to lose money on a demo account because it's not your money. But trust me, when going live, it's a completely different story, and the emotions tend to get a lot more intense. Okay, tends to make it a lot more fun as well, for me personally. Okay, now you can, if you want, to add your trading diary entries to the bottom of this page, and basically then creates an awesome trading diary system for you to follow with. Normally what I recommend is actually, once you've finished up your tick chart, print it out and laminate it. Okay, once you've finished it up and that kind of thing, then you basically just use a Koki marker or so forth, whiteboard marker, and you can tick off those conditions and just wipe it out once you're done with the trade. Okay, so you just stick that onto your desk, where you're trading and so forth, and you just follow that. Like I said, it creates the habit of consistency and discipline within your trading. The perfect tool to make sure that you don't fall prey to the emotional side. It's going to be very important to list every single condition for entering and exiting the trade. Okay? And especially with exiting the trade, you need to act on any of those conditions if they come up. We don't know which one's going to come up first when exiting. Okay, that's dependent on the chart. That's dependent on price movement. But the fact is, if it hits your stop, you're out. If it hits your target, you're out. Okay, if you can't load a physical stop, then you need to use a mental stop. But when using a mental stop, you need to keep your eyes on that screen until you're able to load a stop. Okay, so remember these little things. Okay, any exit condition that gets triggered, you act on it. okay, because that's how you're going to test it as well. This is really all you need to be able, okay, to have someone else trade your strategy. Remember what I said, within the course material, okay, and the Saturday sessions and so forth, those webinars. With those, okay, you need to be able to give a complete stranger your written strat, and you give them access to your account, and you go on holiday. They should then be able to duplicate every single trade the exact same way as you would have taken the trades. If they can't do that, okay, then your strategy is not written correctly. And you need to revise, because there's one or other condition that might be ambiguous, or it might be it's too open-ended, so it leaves too much room for play. We don't want that, okay, because that's where the confusion starts coming in. The key factor is to try and remove the confusion from out your trading, and this is a great way to make sure that you do it. This will also allow you to merge more than one or two different strats together, creating one big tick chart for multiple type of entry techniques. Okay, and entry conditions would be listed then in the following manner. So let's say we've got two different types of entry criteria. Okay, we've got our first entry criteria, and then we write or, and we've got our next set of entry criteria. So we either have both those meet or both of those. Okay, so you can see they're grouped together and only split with the or. Okay, and you'd have the same way as with the selling entry. Okay, remember, wording of your conditions is going to be extremely important, as any ambiguity within your conditions can wreak havoc on your trading. Be careful of having something that is too open-ended. Okay, make sure you are precise with your conditions, leaving no room for interpretation, because then you basically become a gambler. Okay, you're going to be guessing, predicting what's going to happen, and we don't want that. We know that doesn't work. Okay, like I said, guys, this eliminates the confusion when using a multi-entry method strategy. Okay, that's it basically for that. Okay, now let's quickly have a look at our trading platform. Let me just get that up for you guys. There we go. Boom. Okay. Now, okay. Guys, I have actually found another broker, a new broker. It's a local one. It's one here in Cape Town. It's on our doorstep. Okay. And I've been sitting with the guys last week, and we've been talking, for hours actually. We sat on a meeting, sat there for hours, just talking, that kind of thing, looking at what they offer, how they go about it, and trying to see how it can benefit our clients and that kind of thing. And I'm not going to lie, I'm very, very happy with how these guys go about their way of doing it. They actually have the exact same vision as we have got in terms of having a long-term relationship with a client. Okay, the problem that most other brokers have got, that's why I don't like, a lot of brokers. It's the fact that they one of those, hit and run types of brokers. They'd rather just take a deposit and have you lose the money, and they don't care. They've made their money. Okay, but that's not the right way to go about it. I mean, I don't want that for any of my clients. I want my clients to be able to trade for a lifetime, to be able to make money all the way through. Okay, I don't want your trading career to only last a couple of months or maybe even a week. Okay, that's not what it's about, and that's not what I want to teach you guys. And that's the thing for me. Okay, it's about making sure that you guys can grow and trade for the rest of your life. This is why I'm trying to teach you guys these skills. It's so that you can do this completely on your own, separate from me. Okay, so remember, I mean, it's like I always joke, what happens if I get hit with a bus? What are you guys going to do? Would you be able to go on without me? That's the point I want to get you guys at. Okay, remember, my job is to make sure that I steer you guys in the right direction. I want you guys to be able, okay, to come up with your own solutions. Start thinking outside the box, okay, and therefore find something that fits your personality in terms of trading. Every one of us is different. Therefore, we need to find something that suits ourselves, okay? This is why I say just trying to copy someone else's strat doesn't mean it's just going to generally work. You need to firstly have the time availability, the exact same time availability that the other person uses on their strat. You need to understand that strat fully, okay? And if you can't apply it the same way, it's never going to work. So you need to find something that fits your particular conditions at either home or work, and make sure that it can run with that. And some of us, we work long hours in that sense. We've only got a couple of minutes a day, maybe. That's where an end of day strategy would work quite well for you guys, because you only need to put a couple of minutes in each day. I mean, any of you sit through my end of day trading sessions, you know how quick it goes. Those of you who've been following that kind of thing, I mean, it literally takes, for me, it's just 5 minutes. It's boop, 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 done. Okay. Yesterday was a quick one. Just went through, I had a couple of trades that came up and that kind of thing. I'm sure you guys also had a couple of trades coming up. But yeah, the whole thing is it's very quick because you know what you're looking for, you know what you're going about. The only thing that takes time is learning the signals and so forth, or understanding the platforms and that kind of thing. Okay. But you need to understand those to utilize these things to the best of your potential. Okay. Now the guys I'm talking about, it's basically Kwezi Financial Services. Now these guys, okay, are fully FSB licensed and registered. Okay, they've got a Category 2 FSB license, and they've got a Category 1 FSB license to give trading advice. Okay, that's something which none of the other brokers have got actually. And the beautiful thing is, if you look at the bottom here, they've got Rand accounts. Okay, so your money never leaves the country. Stays in South Africa. It gets done in a segregated South African bank account. And these guys are extremely helpful. If there's any issues and that kind of thing, you just jump on the phone and they sort you out and that kind of thing. And they told me as well, any of you guys would like to go around their offices and visit them as well, by all means, you can do that. Beautiful thing is that their spreads are quite low as well. Okay, they're also an STP broker. Very, very good spreads and so forth. So all in all, these guys so far, I've checked it out. They've actually got all of your different types of instruments in terms of your currencies. Okay, and then check here. They've got the international CFD shares. Okay, they've got oil, Brent, crude, those kind of things as well. Okay, and then here we go. Here's all the other features that they've got. Okay, and great thing is that they've actually got all the local shares or CFDs on here to be traded as well. Okay, so we've got the, here we go. You see Barclays, which is ABSA, Anglo American, there's BHP Billiton, okay, Bidvest, British American Tobacco, okay, guys who do Marlboro, all the top 40, okay, and there's Discovery. Okay, so any of you looking at utilizing the top 40 shares and that kind of thing, CFD wise, they've got it. Okay, so that's the beautiful thing. They've literally got the full house offering as well. Okay, so very, very awesome to go with. Okay, so William's asking. Okay, Daniel, what's as long as they're not connected to Panama. Yep. And then let's see here. Okay, would you recommend them above ACM? Okay, yes, I would. Okay, personally, I feel they handle things a lot better, a lot quicker, and they're a lot more transparent as well. Okay, the problem I found with ACM Gold is the fact that there's not a lot of transparency. Okay, the other problem is that they have been suspended as well, by the FSB, whereas Coesia hasn't been suspended yet. They take a lot of pride in their FSB license, and that's why they make sure that nothing happens to get them into that whole point of getting suspended by the FSB. Okay. Okay, for demo purposes. Okay, here's the thing. Good question, Daniel. What I'd recommend in that sense, okay, is it's up to you. The big difference, however, between ACM and Coesia at this point in time is the fact that they use Rand account. Okay, so there is going to be a slight difference in running with them. Okay, normally what we do is we trade with dollar accounts. They are actually bringing that in very shortly. We're just waiting on having that done. But at this point in time, your money's basically going to be held in rands. Okay, so you don't pay the transfer fees or those type of things as well. For the exchange rate. I am, I did request from them to see if they can get the US dollar accounts on there as well, because it's always good to diversify. Okay, the only difference you need to know is that if you work out your 1%, okay, with Coesia, you're going to take, we've obviously got, took a trade, earlier today and that kind of thing, but basically you're going to take your 1%, right, and you're going to divide it by the Rand dollar exchange rate. So at this point it's sitting roughly at 15 Rand, so you divide your 1% by 15, and then you divide it by your stop to entry. So you basically convert your Rand into dollars. And then it's the normal calculation. That's the only extra trick that you're going to use to make sure that you get that spot on 1% risk. Okay, so basically both work the same way, right? But I'd recommend, if you want to, by all means, jump onto Coesia, that kind of thing. If you guys like, just send me an email, okay? And what I'll do is I'll just send you guys the details and so forth for signing up with them, okay? And I'll give you the contact details for Peter over there. Awesome guy there. Peter is actually also doing our course, right? So that's something that this shows you the type of how to say where the guys go, the extent that they go, and making sure that they can service our clients to the best of their abilities. Okay, Peter's actually doing our course as well, and this just makes sure that if there's anything that comes up, he knows exactly how our clients go about it, what their needs are, and they'd be able to help you like that. Okay, so that impressed me personally. Okay, that's something that ACM never offered me. Okay, and it just shows that these guys are serious in terms of that. They're very client oriented. That's the big thing for me. It's to make sure that you guys looked after with whichever broker you are with. Okay. So yeah, just pop me an email, and then if you're interested in jumping on with Coesia, basically I'm just going to be using them from this point onwards. So if you want to kind of jump over as well, by all means, just send me an email and I'll send you the details and so forth. Okay, like I said, these guys are insanely awesome. Love what they've done so far. And they've got a couple of other extra things that they're going to bring in as well. They actually allow mirror trading and those type of things as well. Okay, money management conversion, sure. You're basically going to do your 1%. So let's say it's 5,000 Rand, okay, that you're going to start with. Okay, all you're going to do is you're going to work out what's your 1%. That's obviously 50 Rand, right? Okay. Now it's 1% of your account value. Okay, so it's 1% of your balance. Now your balance is in Rand. Okay, so it's 1% of your balance, and you just divide it by the Rand dollar exchange. Okay, exactly like you've got it there. So basically at this point, Rand dollar, I've got it here. Check here, US Rand. It's sitting at 15.05. Okay, so you'll basically divide it by the rate over there. So you'll take your, let's say it's 50 rand is a 1%. It'll be 50 rand divided by 15.05391, and that will give you the dollar risk for 1%. And then you just divide it by the stop to entry distance, as always, basically. So that's the only extra little thing that needs to be done. You just need to divide it by the dollar rand exchange. That's it. Okay, so that should clear it up for you guys in terms of that. Just remember that though. Okay, so yeah, you've got it perfectly set there. It's the 1% divided by the dollar rand exchange in that sense then. Okay, right. Now, here's a couple of things I want to show you guys. Okay, in terms of identifying what type of indicators might work with a particular flow of a chart. I mean, I've been running with a particular system. Okay, I've backtested it for like what, 2 or 3 years back, and it's shown some good results. But this year so far, that system hasn't been producing great results. That's the 3 moving average setup with the stochastic entries, right? It's not that it's producing brilliant, or how to say it, it's not producing bad results. It's still giving growth. Okay, that's the beautiful thing. But the problem is that like over the last 4 or 5 months, it's only been growing the account for it's been roughly a 20% growth. Okay, so we've had a couple of bad months, but it's basically because the euro US dollar is in a bit of consolidation. At this point, or not consolidation. We had the consolidation there. You can see this is the daily chart, right? But the issue is the short-term flow that we've been seeing within the euro dollar. Okay, it's running quite a lot differently from what it did the previous couple of years. So it shows that there has been a slight change in market conditions. So we might need to find a slightly different way to push up the results, of our earnings compared to that 3 moving average system. Okay, with the stochastic entries. So still producing profits, still doing good, but because of the flow at this point in time, I'm definitely looking at trying to put something else together that might work with the current flow that we've got. Okay, and that's how you're going to go about it, guys. You're going to notice that you tend to find that every now and then your strategy gets into a situation where it's giving growth, but it's not performing the same way that it used to. And that's why we do that backtest, because it gives us more than enough data to be able to judge whether our system has become redundant or not. I wouldn't say redundant. Okay, well, if you've got quite a couple of losing months and it surpasses your worst case scenarios, well then yeah, then you don't want to jump with it anymore. Okay, you're going to stop live trading if you're trading with it live, and you're just going to run it with demo to see whether it gets out of that cycle or not. But you're definitely going to want to look at utilizing something else. Now, to give you guys an idea, okay, let's say we're going to go and we're going to use, let's go with the MACD. Okay, I'm going to put this on standard settings. Let's check the colors. Okay, that's all good. Yeah, let's get the width set. I normally like using 2. There we go. Boom. Perfect. Okay. So we've got our MACD trigger cross, and now we want to see whether it's flowing nicely with the chart, whether it can give some nice signals, those type of things. Okay, which we go for. Okay. Sometimes looking at it like this might be slightly difficult. So what we tend to do, and what helps, is to zoom out, because it tends to give you the bigger picture. Okay, the further you zoom out, the better you kind of can see whether overall a particular indicator might actually work with the flow of a chart. I normally tend to do this, especially with building a new system. So I first kind of just judge with the eye whether the flows correlate nicely, whether it looks like it could be producing something, and then I decide on what I'm going to use to start off with. Then I basically start doing my back testing, and once I'm going through my back testing, that is where normally, because I'm going a lot more in depth with it, okay, that is normally where the extra little signals or solutions tend to pop out from out of the screen. Okay, like I say, sometimes I notice that there's a particular flow that recurs over and over and over at a particular point. And then I might look at, utilizing that or taking advantage of that type of flow and seeing if I can find another condition that might make, use of those type of patterns that I'm finding. So that's normally the process that we tend to, run with to be able to get to a point where we can, get a nice strategy built. Like I said, the biggest thing is you always want to start off with two indicators. One for bullish or bearish, one for entry, and then you want to go with 2 exit. It's target or stop. Risk to reward always 2 to 1. Stop to entry is always going to be most recent high and low within 7 candles. That gives us a normal type of flow for standard entry mechanism. Okay, that just gives us our guidelines in terms of growth potential for that system. You're going to find that sometimes it just doesn't produce any profits. Doesn't matter. It really doesn't matter. Okay. Sometimes you find that it actually produces good profits. If it does, hey, you're onto something really good. But remember, the fact is that you can take a system that is negative in growth, and just by tweaking it slightly in a couple of methods, you can turn it into a positive system. Sometimes into a very positive system. Okay. And that's why I never gun down any type of system. It's all about knowing how to tweak it. And that's the big key there. Okay. All right. At this point in time, guys, we've basically gone through the bulk of the basics of putting a strategy together. Okay. Now, this is kind of getting back to old school methods again, especially for you guys, since you've gone through this before and that kind of thing. It's basically just a recap for all the other clients that I've gone through now. I just want to find out from the two of you that are on at this point in time, are there any extra questions you've got that you'd like me to tackle within strategy building specifically? Otherwise, I'm just, we're going to be done, and I'm just going to be setting up for the next session in 30 minutes, and I'll probably see the two of you on there as well. Okay, so Daniel's all good. William, anything on your side? Okay, great stuff, gents. Thanks for joining. Okay, so end of the session basically. Now, next month, obviously, we'll be doing the strategy building. We're going to get a lot more in depth with it again, getting a lot more into the smaller details and that kind of thing. Okay. Like I said, I just wanted to do a quick recap of the basic methods and so forth. Okay. Okay, awesome. Thanks, William. I'll send you the details then. Okay. Right, and then from next month again, we'll start looking at it a lot more deeper and looking at the more advanced techniques and this type of things. Okay, right, guys, that's it. I'll probably see the two of you and probably a lot of others then for the next session. Remember, it starts in 30 minutes. I'm just going to get the links and everything set up, and I'll email all of you the new links. We are having issues. I have said in the email as well, we are having issues at the moment. There's a bug within the programming for our replay feature on the webinar. So unfortunately, the replay feature isn't working at this point. Thus, I'll be sending you guys the YouTube links to be able to, kind of watch the replays. Okay. So later tonight, I'll just send you those links, and you can view the sessions. Okay. And then, we are looking at it. Our developers are basically just checking, what the issues are and that kind of thing. So hopefully that is sorted, by next week at least. Yeah. So, okay, that's it. Otherwise, guys, thanks for joining. Check you in half an hour.